Hello and welcome to Capital Market Live on Channels Television. I'm Will Ibong, and as always, let's check in on how stocks performed this week. We kick off with Europe, where stocks advanced on Friday to round out a bruising week as investors reacted to a key U.S. jobs report. Major indexes locked triple-digit gains. The German DAX closed on Friday higher by 3.33%. The UK's FTSE 100 rose almost 2%, while France's CAC 40 surged 2.21%. Meanwhile, European stocks made a negative start to the new trading month on Thursday, with the European blue chip index closing 1.8% lower, having finished the month of August in the red. In Asia, stocks were mixed on Friday as investors looked ahead to the U.S. jobs report for August, a key indicator before the Federal Reserve's next interest rate decision later this month. The Nikkei 225 in Japan was almost flat at 27,650 points. Hong Kong's Hang Seng Index slipped 0.74% in the final hour of trade, and the Hang Seng Tech Index dropped 1.28%. Mainland China's Shanghai Composite rose marginally to 3,186 points, and the Shenzhen component was slightly lower at 11,702 points. Now to the U.S., where U.S. equities fell on Friday to cap their third straight weekly decline after a solid August jobs report failed to ease fears that the Federal Reserve would keep aggressively hiking interest rates to fight inflation. After rallying through the morning, the Dow Jones Industrial Average erased a 370-point gain and finished the session lower by 1.1%. The S&P 500 fell about 1.1% as well to 3,924 points, its lowest close since July. The Nasdaq Composite declined 1.3%, recording its first six-day losing streak since 2019. All of the major averages were lower to end the week, making it their third negative week in a row after slumping in the final days of August. Now to the domestic equities market, where stocks opened the week on a negative note. However, bargain hunting activities in the latter part of the week pushed the index above the 50,000 level as it rose by 0.73%. Investors' interest in Guinness, Stanbic IBTC, Access Holdings, Lafarge, Boa Foods, and Boa Cement drove the positive performance. The month-to-date return is now back to positive territory at 0.4%, while the year-to-date return increased to 17.2%. Activity levels were mixed as trading volume increased by 30.7% week-on-week, while trading value declined by 15.3%. Sectoral performance was bullish as all key indexes recorded gains. Vitafoam topped the gainers chart for the week, while Unilever Nigeria recorded the most significant loss. The financial services sector drove market volume and value this week, and leading in top trade category, we have Sterling Bank, Fidelity, and Access Holdings. Similarly, the NASD OTC Securities Exchange Index, that's the unlisted equities market, closed the week positive. The NASD Securities Index edged up 0.16%. Volume of stocks traded rose sharply. However, value fell by 19.17% to 114.33 million naira compared to 178.5 million naira traded last week. Niger Delta Exploration and Production topped the gainers chart this week, followed closely by Afriland Properties, while Double 11 PLC led the underperforming stocks. Meanwhile, City Trust Holdings and NASD PLC were among the top 5 stocks traded by volume for the week. Now joining me from our Abuja studio to review the developments in the equities space and other issues is Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, and President, Association of Capital Market Academics of Nigeria. Good to always have you, Prof, on the show.
Thank you very much, Will. It's indeed my pleasure.
Prof, global stocks, this week has been a bloodbath for global stocks and bonds as they slumped, to their lowest. However, Nigeria's NGX index was able to cross back to the 50,000 level. Was this expected and so soon?
Well, I think it was. And again, don't forget that our market is not strongly linked to global markets. Global markets, especially the U.S. market, is responding to the interest rate normalization program of the Federal Reserve. That's despite strong job reports in the U.S. As you know, inflation rate in the U.S. is quite elevated, unprecedented, at over 8%. And so the Federal Reserve is trying to tame inflation, by increasing rates. But interestingly, the job market in the US is said to be tight. When a job market is said to be tight, it means you have many openings, available for people who are looking for jobs. It is said that you have 2 openings, for example, available for one job seeker. So that is a tight labor market, and that's positive for the U.S. economy. But despite that, inflation is taking the shine off that positive side, and that's on the back of the Russian-Ukraine conflict, majorly. Back home, as I said, the market is not strongly linked to what happens globally. You find that even during the COVID 2020, the NGX was the best performing stock in the world. When other stocks, other markets, received the bashing, we were able to, be above waters by over 50%. Now, what happened last week, as I said, was expected on the back of favorable earnings, from some companies, and again, in anticipation of more earnings releases. We saw, just as we had it the previous week, we saw 2 days of market depreciation, and then 3 days of gains. The previous week, you recall, the market inched up by 0.66%, and we also witnessed an appreciation this week by as much as 0.73. Excuse me, 0.73%. That's talking about week on week. So week on week, the investors gained about 197 billion naira this week, and that's majorly as a result of buy interests, bargain hunting, as you rightly put it, in some relatively medium cap stocks. If you look at the top gainers, for example, the top 10, you find that many of them are, what you might describe as medium cap stocks. Talking about Guinness Nigeria, that closed at I think about 87 naira 90 kobo. You also have the likes of Stanbic closing at 33 naira. NGS Group at 22 naira, and of course Vitafoam in the consumer goods category at about 23 naira. And of course the consumer goods sector led the gainers, gainers chart. That's talking about the consumer goods index. On the loser side, mainly penny stocks, you might say, the likes of Sterling Bank, 1 naira 49 kobo. RT Briscoe, penny stock, 32 kobo. So apart from Cadbury, at about 12 naira, and Unilever, Unilever 12 naira, Cadbury 13 naira. The bulk of the losses, were mainly penny stocks. That's why you saw the outcome this week.
Prof, so we would say that we saw a higher number of price appreciation for equities when we compare to last week. So you're saying bargain hunting is what we should attribute all this to. So could it be something else? Could it be investors looking to just diversify their portfolio, move it around? You mentioned penny stocks. What of the high-valued stocks? That's the big names in the market. Why are investors selling? We saw Unilever taking a big blow, a big hit, this week. Why are investors selling Unilever?
Yes. Okay, now, overall, you could also say that the market was responding to the favorable, GDP numbers that came in, recently. As you recall, the National Bureau of Statistics released its Q2 2020 GDP reports, which says that real GDP growth came in at 3.54% for quarter two. Compared to quarter one, that was an improvement. In quarter one, it printed at 3.11%. So that's favorable, and the market was also reacting to that overall, because if that GDP number had talked about a contraction, or even a number that is lower, far lower than what we saw in quarter one, that it's possible that that could have also helped to dampen investor sentiment. But positive investor sentiment that we saw, as I said, was a reflection of the earnings results that some companies released. Take Stanbic, for example. Stanbic, of course, did a corporate action, announced a dividend of 1 naira 50 kobo. For Stanbic, the earnings per share grew, from about 1 naira 92 kobo to over, the 2 naira. So that, of course, spurred the demand for Stanbic shares. Stanbic, among the shares that appreciated, during the week, to now, 33 naira. Okay, so we also saw a number of other companies, releasing results. So if investors are offloading, if there is a sell pressure with respect to a particular stock, that may not be unconnected with if you like, the fundamentals of that company, or what investors, are seeing.
So, Prof, are you saying that?
Remember too,
Prof, are you saying that banking stocks are the toast right now? Should investors key into banking stocks? Because a lot is happening. Cost of operations is going up. Recently, we just heard that some banks are going to be closing earlier than expected because of insecurity and high cost of operations. So you think the banking stocks are on, a verge of, I don't know, are they going to have some trouble in the future?
Well, yeah, but it's not only the banking sector. It's the overall, the overall business climate. But again, if the GDP number by the National Bureau of Statistics is anything to go by, the financial sector, talking about particularly the banks, because when you have finance and insurance, as reported by the MBS, it's largely the banks, the banking sector, accounting for 90%, of that of the performance in that sector. The banking sector, or the financial sector, grew by over 18%. I think about 18.5%. One of the highest performing sectors, according to that MBS result, report. So what that tells you is that yes, even when the economy is facing headwinds, there are some sectors that still manage to have their heads, above water. But another example is the telecom sector. We've seen how Airtel, for example, has been performing. Airtel has gone above 2,000 naira now, per share. The most expensive stock now we have in the
about
market.
About 2,000 naira.
The MTNs and the rest of them. So I think, yes, banking stocks, if you look at the first five, what some people call the Fugas banks, the First Bank, UBA, Jitco,
Prof,
Access Bank, and Zenith.
Prof, just hold your thoughts there. We'll take a quick break. And when we return, the conversation continues. This is Capital Markets. Welcome back. If you're just joining us, this is Capital Market Live on Channels Television, and we've been drilling down on the numbers and activities behind equities market performance this week. And Professor Uche Walike is still with me from the Abuja studio. Prof, you mentioned a number of quoted companies, Zenith, Stanbic IBTC, who have released their unaudited half-year results. Zenith Bank, Nestle is included. How would you describe the performance of these companies? You were saying something about Airtel. You could talk about that, and then you talk about your assessment of these earnings result that we've seen.
Yeah, thank you, Will. Usually when I come here, when I come on your program, I try not to be specific, so I don't appear to be, marketing, as it were, a particular company's stocks. But permit me to say this as, as a good example. As we speak, there are a number of stocks in the market today that represent, a good buy, or if you like, in my view, quite undervalued. As I said, permit me to just use this example. Take Zenith Bank, for example. Zenith Bank today is trading at 21 naira 50 kobo. It is trading below its 52-week high. Its 52-week high is about 22 naira. And 52-week low, 22 naira. It's trading below its 52-week low, 22 naira. And this is a stock that at some point too sold at over 26 naira. So 52-week high for Zenith Bank is as high as 26 naira. And it's already below its 52-week low. But that's not even the story. The story is that if you check the Tobin Q of Zenith Bank, well, the closest you can have is the price to book ratio. The price to book ratio is quite low, below 1, and that tells you that that stock is, at present undervalued. If you take the PE ratio, take some other numbers with respect to Zenith Bank, I think it's one stock that I consider, undervalued, at the moment. I think that's all. There are others that I won't, may want to mention here. Now, if you look at the Fugas banks, of the 5 of them so far, it's only First Bank and Zenith that have released their, quarter 2 results, or of course half year results. The others, UBA, Access Bank, and the JITCO, are yet to release, and that's why if you look at those stocks today, if you go to the NGX website, you'll find that these stocks have attached to their names against their symbols or their ticker, the acronym AWR. AWR stands for awaiting, regulators' approval. They have not released. Of course, by the NGS rules, companies are supposed to release their or file their quarterly results, financial statement results, 30 days after the end of the quarter, if they want to do, if they are dealing with unaudited financial statements. But when they want to audit the financial statements before submitting, they have to do that within 60 days. First Bank was the first to do. First Bank submitted unaudited financial statements and met the deadline of 30 days. Zenith Bank submitted audited financial results, but the rest are yet to submit because, according to them, they are yet to get approval from their primary regulator, which is the Central Bank of Nigeria. So the NGX, allows that as giving them extension. So until their results come out, we may not be in a position to really assess them. But if you look at the companies that have released so far, you will find that many of them, reported improved earnings, improved earnings per share. Okay, and that's why I said, and some of them too have even gone ahead to announce interim dividends. Again, in the banking sector, look at Fidelity Bank, for example. Fidelity Bank's earnings per share increased from 67 kobo to 80 kobo, and Fidelity Bank too is paying interim dividend of 10 kobo per share. The qualification date is I think September 12th or so, closing the register on the 13th and making payment thereafter. So Fidelity Bank, again, is one bank that has reported some improvements in earnings. You have a number of companies too that are reporting improvements in earnings.
Before you move on from Fidelity, Fidelity Bank in the course of the week had announced that it was acquiring Union Bank UK. could you just make us understand what that means and the implication for investors on both sides of the company? Or could you tell us how that affects investors?
Okay, yes. Thank you. I also read that. And of course, if you also check the NGS website, NGS Group website, you will find that that's also one of the corporate disclosures. You find there Fidelity Bank proposing to acquire 100% of the Union Bank's UK, Union Bank UK. Okay. Now, recall that not long ago too, we also read that the same Union Bank offloaded 90% of its shares to Titan Trust. Now, Union Bank has about 29 billion, outstanding shares. And Union Bank today is trading at 5 naira 60 kobo. So that gives you an idea of the valuation of Union Bank, the one that is listed. But of course, the Union Bank UK is a subsidiary of, I understand it's a subsidiary of the Union Bank. So what Fidelity Bank is doing, of course, Fidelity Bank has an international banking license, and this is the first time, to the best of my knowledge, it is foraying into the international scene. So is seizing that as an opportunity to enter the UK market, since the Union Bank UK is a company that is foreign. So by acquiring Union Bank UK, again, listening to the CEO of Fidelity Bank, she says it's part of their strategic plan, to expand and become a first tier bank. So I think there is something they're seeing that is making them to want to acquire Union Bank UK. But again, if you look at Union Bank UK's financials, especially for 2021, what strikes you is that this is one bank that has reported losses, since 2019. So you could say it's a loss-making company. Mm-hmm. And again, for Union Bank UK, you also notice that their net asset, dropped from about 27 billion to about 19 billion, in naira terms over the same period. So for that kind of company, if Fidelity Bank is acquiring it, as I said, there must be something. They are also looking at the potentials. They feel it's a company they can acquire and turn around, to the advantage of Fidelity Bank. And
so how will investors,
if you also take into...
How will investors profit from this? Is it like would they be able to have a company that is listed probably outside the country on maybe the London Stock Exchange? Is this in the offing? Do you know about this?
Yes. If you are acquiring a company and there is a potential that acquisition, will add to the value of your company. If as we say in finance, if the net present value is going to be positive, it's going to add to your value. Of course, it will eventually show up in the share price of the company. So this is an acquisition, and usually acquisitions, if they are rightly done, when I say rightly done, again, no, we have not been told about the purchase consideration. We don't know how much that Fidelity Bank is going to pay by way of purchase consideration. But if it's the proper valuation is placed on the Union Bank UK, and then the acquisition is done, and the Fidelity Bank again is able to leverage that to grow its earnings, you should expect that will rub off positively on Fidelity Bank's share price. Today, Fidelity Bank is selling at around 3 naira 40 kobo. So I expect that with what has happened, the share price of Fidelity Bank, will enter a positive trajectory.
That's good to know, Prof. So, Prof, quick one. Give us a quick outlook, very brief. Are you bullish on next week? What's your outlook ahead of the Central Bank's Monetary Policy Committee's meeting later this month? What's the quick projection for next week? Are you bullish or bearish?
Okay, well, the MPC meeting is not going to. We are not expecting it until much later in the month. Of course, on the 15th of September, we also expect to get inflation rate for August, from the MBS. But I think next week will also be mixed, but generally, bullish. The positive sentiments will linger because, as I said, we are still expecting more companies to, release their results. We are still in the earnings season, so until and as I mentioned earlier, for some companies too that have released, their qualification date is still ahead. Some on the September 12th. So some investors may also want to get dividends. Before they close their register.
That's good to know, Prof.
So
we'll remain bullish,
yes.
Prof. We'll remain bullish. Professor Uche
Yes.
Waleke, Chief Professor of Capital Market, Nasarawa State University. Thank you so much for coming on the program and sharing your perspective with us.
Thank you very much, Will.
And that's it on Capital Market. Do join us same time next week. I'm Will Ibong. Bye for now.